If you keep up with the news, you know that the Fed has just cut interest rates for the first time in 4 years. This means buying a home will finally be affordable again, right? Well, not so fast.
Not so fast, princess.
Hi, I'm Sarah Maslowski with KeyPoint Homes Group, a local real estate agent right here in the Northeast Metro Atlanta area, and I specialize in helping clients from all over relocate right here to Georgia. With this news coming from the Fed Reserve, it sounds like it will be easier and more affordable for buyers to secure a new home, but that's not entirely the truth. So what do you need to know if you are in the market to buy a new home? On September 18th, the Federal Reserve announced that they would be reducing the interest rate by half a percentage point. There was a lot of speculation prior to the Fed's announcement as to what the reduction would actually be. Many economists thought that the Fed would shave its benchmark rate by 0.25%, which is what the Fed's standard reduction is, and others thought that we would see this jumbo cut of half a percentage point. Well, Fed Chair Jerome Powell said during the announcement that recent economic data, such as a slowdown in hiring combined with a decline in inflation rates, convinced Fed officials that a larger cut was needed. He said, quote, "We took all the data and concluded this was the right thing for the economy and the people that we serve. Our patient approach has paid dividends. Inflation is much closer to our target of a 2% annual rate. The upside risk to inflation have diminished and the upside risk to employment have increased." So this sounds like great news. Well, the Fed's interest rate is not the only thing that determines mortgage rates. And in fact, if you had watched my previous market updates, you know that mortgage interest rates have already been working their way down, even before the official announcement on September 18th, because this drop in interest rates had already been alluded to. So mortgage rates made their way down in anticipation of this announcement. This means effectively that the rate cut announced by the Federal Reserve may already be priced in, though mortgage rates are likely to continue falling a little more given that policymakers had made clear they intend to continue cutting interest rates into next year. Many economists predict that we will continue to see mortgage rates drop quite significantly. In fact, according to NPR, a senior economist at Wells Fargo, Charlie Daugherty, expects the 30-year mortgage rate to fall somewhere near the 5.5% range by the end of 2025. Currently, interest rates are hovering around 6.2%, which is the lowest they have been since February of 2023. That additional 0.7% has quite the impact on a mortgage payment. For example, if you were buying a $500,000 house with a 5.5% interest rate, you're looking just over $3,600 a month. If you compare that same house with a 6.2% interest rate, you're looking at a payment that is $200 more per month, and the only thing that $200 goes to is just the interest. Now, having a lower interest rate on your mortgage is fantastic. I just told you that a slightly higher interest rate can make your payment a few $100s more a month. However, the problem is that when mortgage rates fall, that's when buyers rush to return to the market, which creates more competition, driving up the sales price of your home. Recently, with higher interest rates and less buyers in the market for home sellers, they have oftentimes been more willing to contribute to closing costs, accept contingencies that they likely wouldn't have in the past, and be a lot more negotiable in general than they have for the past several years, since there just haven't been as many buyers in the market for homes because of the higher cost. This has actually been a great time for many buyers. They have been able to negotiate terms that made the higher interest rate much more palatable, buying a home for more than fair market value, and having sellers contribute to their closing costs to offset the deficit from the higher rates. The trouble with lower rates is that buyers are going to think that this will be the best time to buy, even though agents like myself have been trying to get buyers to realize that when rates were higher was the best time to buy, to be able to secure a home without major competition. A lower mortgage rate is definitely helpful for a buyer in terms of monthly payment. But if that same house you wanted 6 months ago is now going for $10,000, $15,000 more because there is so much more demand in the market, it's still going to be very difficult to find a home you can afford, and any savings that you were going to realize from that lower interest rate is going to be wiped away by the additional expense that you're going to have to pay towards your principal every single month. According to the National Association of Realtors, the median home price across the US has risen 50% over the past 5 years. That is extremely tough, and I fully understand how frustrating that is for buyers and sellers as well, who, yes, will likely be making a great profit from the sale of their house, but then they're gonna have to turn around and pay the same high price to buy their next home. So what does all of this mean for buyers and sellers who are getting ready to make a move? One thing I think we can definitely expect is a very strong and busy spring market. Spring is always a strong time of year for the real estate market, regardless of interest rates. As the school year winds down and the weather gets better, naturally we see an influx in activity in the spring because people want their kids to be able to finish out the school year where they're at. And people usually avoid moving in the winter just because of the weather and all the holidays, and everyone's focused on that. I think we will see more of a trickle down with interest rates as opposed to a big drop. And as these rates continue to make their way down slowly, the number of buyers in the market is going to go up. By the time spring rolls around, we're gonna see our normal influx of activity, plus we're gonna have had 4 months or so of rates continuing to trickle down lower, so I predict there's gonna be a lot of demand, especially here in the Northeast Metro Atlanta area where we already have pretty high demand. Now, my advice would be if you have the ability to go ahead and buy now as opposed to waiting for the spring, I would act on this. You can always refinance if you are really just concerned with the amount that your interest rate is. And oftentimes clients are confused about what it means to refinance. You do not have to wait for a certain amount of time period before you're able to refinance your loan and take advantage of that lower rate. It essentially just adjusts your mortgage down to that new interest rate and your payment adjusts as well. Now, if you enter the market before things majorly heat up, you can hopefully secure a home before those prices begin to move back up, before the competition comes in and we're in bidding wars again for homes. Right now, at the time of filming this video, right after the Fed's announcement, homes are still sitting on the market longer. There's a lot less competition and buyers are getting more negotiable terms. The quicker you are able to get something under wraps, the more likely you are to avoid higher prices and more competition. At the end of the day, it all depends on your circumstances. If you know your move is something that has to be done, but you were hoping just to wait a little bit longer to spring to have some more options or a better timeline, you may want to consider seeing if there is something that meets your wants and needs now before prices increase because of demand, whether it be driven by rates or just even seasonality. You may want to consider the carrying cost of buying this home in advance as opposed to waiting until spring when you'll have to pay more for the house as a whole. If you're able to get closing costs from the seller because you bought early, that is cash that now stays in your pocket since you don't have to bring it to the closing table, that you could use to pay for that mortgage for the next few months until you are able to physically move, or you need to be in your new house here, or whatever the scenario is. Obviously, this is something that we will need to talk through with your lender to see if it's even plausible for you, but this could be a great solution to beat the spring rush. At the end of the day, you know what is best for you, but there are many creative solutions we can talk through and with your lender about in order to make this process the best it can be for you. A lot of our private clients we meet with and have a strategy session to plan out, learn their needs, and talk through all available options so that they can make the best possible decision for them and their family. I have a client right now that is using this very method. They want to be in one particular neighborhood, but their job will not be fully bringing them here until March of next year. There's a house on the market that they absolutely love with the price they are comfortable with. They know another option like this likely is not going to be around when they move here next spring, but they don't want to miss out on this opportunity. Luckily, the seller is negotiable on timeline and has accepted our offer to go under contract on this home, but we're not going to close until February of next year. Now they can lock in an interest rate this early, have the opportunity to float down to a lower interest rate, knowing that they have this house under contract for a specific price that we were able to negotiate pretty well given the current market conditions. It's a win-win. The seller gets time to figure out where they are going to be going, and my buyers get to secure this home that they love in the community they want to be in for a price that is right for them. So what do you think? How do you think that the Fed's rate cuts will impact the market here in the Northeast Metro Atlanta area? Let me know your thoughts in the comment below this video. If you are interested in making a move here to North Georgia, I want to be your real estate agent. You can reach me by clicking the link in my pinned comment below this video.